Welcome back to my channel once again. So we shall be doing this back testing and checking out more information about this particularly simple idea. So the general idea is that we are looking for this particular pattern that is on a buy, where this is a major level. That's why it's an ML. It's a major level. At this point, this is the entry. This is our second entry, and this is where you put our stop loss. Below this week or below whatever week has been protruded downwards. Okay. So why we have two entries is because you will find sometimes that the market will actually uh, continue with your 70% of the position, or sometimes it will go to fill your second entry with your 30%. Most of the time, you will find that all these trades will give you a risk reward ratio of more than 1:3. Just ensure that the first position has a risk reward ratio of 1:3. That's why you see that this risk reward ratio has started from here all the way to the stop loss. The first position, that is the one, is the 70% um, position. Okay. Now, we are also looking at this when the moving averages are just confirming your direction. Let me show you. When you have this moving average, something like this, let me show you. Keep drawing. I don't know how it's not drawing. Should be drawing. Okay. You will have this moving averages like this. This will be your first moving average and your second moving average and your third moving average. This will be the 20 20 high, the 20 median, and 20 low. Right? With that, this is how we look at the charts now. Have to ensure that the H4, we are looking at the H4, don't forget. The H4, that is for my strategy. You can incorporate this for your H1 or 30 minutes. It depends on what you want. So on the H4 chart, you have to see that the moving averages are first accepting that the direction is on a buy, and then you see this either on a major level or along either the low or the high moving averages, the low or the median moving average when you're buying, the high or the median moving averages when you're selling. You'll see this more when we continue to backtest. So today we are also going to backtest. We can take one chart. Let me get this off the way now. You can take one chart where we shall start. All right, let me get that off. Yes, now we are. Let's look at the Go Chatting platform. I love this platform just because we can be able to uh, play back on different um, on the H4 moving on the H4 time frame. Using the trading view platform, you can't actually play back. They need you to buy it. You can buy it if you want or not. It's all the same. They all work the same. So we shall move back all the way back as much as possible. We shall move. Okay, we want to move the drawings because some of them involve my current analysis. So we can play back, replay from here. So you put that there and you reset the chart, and this is what you get. All right. So at this point now, what we're going to look at, we first mark all the levels that you are going to be seeing. You can squish the chart so that you can get the higher time frame levels by just looking at the general direction of your chart. You have this also, this as well. You can mark it from this point so that it touches this area, this area, this area, and this area. So we can also have another one right here just to mark that area. We can also have another one at this point. I believe, I don't believe we have another major level right there, but we do have a H4 level somewhere here. So you can change the format and maybe put a small rectangular area right there, since we can see that the market touched this area and actually retested it before. It acted as support, then this acted as resistance support, resistance, then we acted as resistance once again, resistance once again. So this is a major level on the H4, right, or a major zone. So we continue to look at it. So if you were to buy it from here, you should have exited somewhere there. So we start playing it back to see if we're going to get any form of entry. We have just touched our first major level. Looking at it, we don't have yet, we still don't have an entry. You see, if you are to be entering immediately that the chart has touched your level, you would have been flied alive. So that's why you need to actually be careful on how you are looking at the charts. Okay, so now that we have this break, we may continue to sell since we have been on this kind of short-term trend, so we can be looking for sales at this particular point. So we continue waiting to see if we do. Yes, I think we may have our entry. Looking at this formation right here, this is, you need to enter every formation you see, right? So we have just broken below that moving average, and we are on a kind of, I don't know what to call this, but it's a small level right there, and we just touched the moving average. So this is a nice trade, but we still have an chance that we might come to retest this area. But regardless, given that we have just had our formation, and this would be where we may put our TPs, since this is our first revolt. So I don't know about this trade. Um, the best place to enter it would be somewhere here. Huh? And we have a minor level right there. Okay, you know what? You need to enter all of them. Okay, so let's just enter at this point with our stop loss just about that place, and our TPs, at least 1:3. 1:3, 1:3. So it's below right there. We can see if we can actually push all the way down to this level. That's 1:7. So that would be nice if we could actually sell from this level. Okay, and we shall have our second entry at this point, like we said. So you can actually see that this is the same pattern, but you know, what do we call this? Upside down. Okay, upside down. So this will be our second entry with our 30% deposition, right? And this, when I dragged it, this would be our second entry, and this would be where we might get out, all right? Because this is where we actually find the next exit. But for this particular trade, due to its very long TP, that is, the TP is all the way down here, you can actually see that the risk reward ratio is now about 1:6, and you have a 1:9. It's crazy. So once you get to 1:3, you need to start, uh, what do we call it? Dragging your stop loss, okay, to ensure that you don't get stopped out and you had already hit your 1:3. All right. So for that reason, we shall have a level or a small line where you get to 1:3, so that just to be aware when your trade is actually kind of ready to be gotten out, right? It's nice to keep an eye on the 1:3 area so that you don't get stopped out yet you had already hit your TP where you could have actually got out. So let's look at where you should put your 1:3. 1:3 somewhere there. So you can put your small line right there. So that once you get there, you know you should be out. But you can drag your stop loss. That is according to how the market looks like. So we continue to play it. So looks like the first entry was entered, and did we get our entry on our second entry? We actually didn't. It's all right. So the first entry got in perfectly, and we got to our TPs. So at this point, you can get out or continue to set and forget. So we can set and forget for now and see where we do get. If we do get our exit, see, let's see. Looks like we're going to get a very good exit. Oh, I just posted. I didn't know I posted. And looks like we're getting our exit. Wait a minute. Ah, man, that would be a really good trade. But don't forget, this is why you are not just entering your positions anywhere. All right, you wait until you are on a week on a level on a H4 level which you consider to be a good level. Like this could have been an entry. Right? You see this particular level there could be your entry. But look at what would have happened. You would have gotten stopped out. You need to ensure that wherever you are taking these positions are not just anywhere. All right, not just anywhere. You have to have levels over there. So for this particular trade, basically it should have been out already, but for those who are still continuing to set and forget, no stop loss has been hit and no TP has been hit. So let's see if you did set and forget for long enough, but don't forget, still market is moving and you need to be looking for more opportunities. That is, until we get new opportunities, we still can't do anything. Yeah, and boom. So for those people who would have set and forget, you would have actually gotten out with the 1:what. So this didn't get entered, so don't forget that. So we can remove that. So you would have actually gotten out with the 1:6 risk reward ratio, but you would have waited. Huh? Look at all these H4s. You would have waited. Let's measure that time so that you could actually see and have a sense of time. When you're backtesting, you really don't get a sense of time, but you need to actually measure and get how long could you have waited if you were to be in this position. You could have waited about 9 days, 16 hours. So that's like 2.5 weeks. Yeah, but you could have gotten your 1:6 risk to reward ratio. Let's do the math. How much money could you have made if you had waited for that position? That is 1:6. So we are risking like 70% of 1.5%. So 70% of it, that's 0.7. So you're risking about 1%. So if you had waited for all that time, that's 2 weeks, and you have gotten your 6:7, that is 1:6.7, you would have gotten about 7%, guys. 7%. So with $100,000 account, even if you waited for 2 weeks, but you got your what do you call it? $7,000, man. $7,000. That would have been nice, right? Even with an 80% split, that's about $5,000. Boy, doesn't get better than that, man. Doesn't get better than that. I don't know, we do have more time for backtesting, but I think we can call it a video at that point. But don't forget, guys, this is just one trend. You can continue backtesting and see how this strategy fares along more trades. So this is just one trade. It doesn't show that the trading what do you call it? That the trading strategy has 100% win rate. It doesn't. Basically shows you that you can actually trust on it. Okay, let me show you another way you can look at it. If let's say this was a H4 level, how many trials would you have taken for you to get this smart exit right there? This could have been one of the trades. Let me show you. This could have been one of the trades right there. You could have entered at this point with your stop loss above that area, which you could have gotten stopped out, and still it doesn't make sense on the risk to reward ratio because this should be your next exit. Another one could have been this one right here with this, and that. This is a nice entry with your entry around this area somewhere here. That is, if the market could have actually come back to take you in, and your stop loss would be above there. And let's see how your TP could have been hit. Let's see, yeah, it could have been hit. Wow, 1:2.24, not so bad. It's quite actually, it's a really good entry. And then this would be a second entry with the 1:3.5 distributed ratio could have also been entered. You also have another one right here where you have this, that, and that. You can clearly see that this red candle is smaller than this one. So if you did actually enter also at this point, you would have actually had your stop loss just above there, and your TP is somewhere there. That's a 1 is to 2.5 risk reward ratio. And your second entry could have been there. It could have been touched, man. Yeah, it could have just been touched, giving you like a 1 is to what? Should be your stop loss. Stop loss should be somewhere there, and your TP and your entry should be somewhere there. So the second position would have a 5.6 risk reward ratio, and the first one could have had your 2.4. So in calculator terms, that could have been 2.4 times zero point 0.7. That's a 1.6. The other one is about 5.2. So remember 1.6, then we have 5.2 times zero point 0.3, giving you about 1.5 plus the 1.6, 1.6, giving you 3. So now multiply that by 1.5%. That could have given you a 1 is to 4. Guys, check this out, man. You can't make this shit up, right? You can't make what? You can't make this shit up. And look at that. In just 4 hours, you could have had 4.7%. Multiply it by whatever uh, prop firm or whatever account you have. If you had 100,000 prop firm, if you had $1,000 prop firm, that is $4,700. With $4,700, if you multiply that by 80% profit split, boy, we are talking about $3,700, man, in 4 hours. Imagine having your what do you call it, a payout day be tomorrow, and having this kind of trade just before tomorrow. Man, I'm telling you, man. All right, that's about it for today, and I thank you for you being here. Continue to follow up on this particular trading strategy, where you shall see more on backtesting. We shall go through the details on how to actually use this trading strategy with you every single day. I'll be making an analysis for one trade or maybe two trades, and once we do get the prop firm, we shall see how I manage it, and over time, you'll get to actually see if I do pass and what kind of payouts I'll be getting. All right. So, guys, inshallah, and see you on the next one. Okay. This is what we want, guys. This is what we want. The $100,000 two-step prop firm from FTMO. I've not been paid by FTMO, but we are gonna buy them and see what we're gonna do. All right. So see you on the next one, guys.